Welcome. In this video, you're going to learn about the accounting equation. The accounting equation is the fundamental concept in double entry bookkeeping. So I'm going to tell you a story to explain the equation. I hope you enjoy it. To start, we're going to represent the accounting equation with three columns. On the left-hand side, we have one column. This column represents the assets of a business. Assets make us happy. These are the things we own in the business. We use these to make money. On the right-hand side, we have two columns, which represent where we get the money from to pay for the assets. The first column on the right represents equity. This is the amount the owner puts into the business. The second column on the right represents liabilities, and these are amounts that other people provide to the business. We have to pay these people back, so we represent this with an unhappy face. In business, we have to get our assets from somewhere, either from equity or from liabilities. So we can say the assets, the left side, must be equal to the two columns on the right side, equity plus liabilities. You should now be able to see that the assets, the happy face, minus the liabilities, the sad face, gives us the equity of the business. That's what the owner has put into the business. Our story starts with Nandi, who's just had a birthday party. She got a lot of money for her birthday and she's celebrating. Nandi is an entrepreneur at heart, so she has an idea. She'd like to use the money to make more money, so she decides she's going to start a lawn mowing business. It will be a good way for her to get exercise and to make money at the same time. Nandi is very excited. She heads to the lawnmower store and buys herself a lawnmower, and she pays 5,000 Rand for it. So Nandi now has the first asset of her business. Her asset is the lawnmower that cost 5,000 Rand. She's going to use it to make money. In our accounting records, we call the lawnmower equipment. Nandi used her own money to buy the lawnmower. In the business, we call this capital. Capital is the first part of equity. We'll show you other parts of equity later. She's the owner of the business. This is her investment of 5,000 in the business. Liabilities are 0. So the left side assets is 5,000, the equity column is 5,000, and the two sides are equal. So we can say that the assets of the business called equipment increased by 5,000 Rand, and the capital of the business, that's part of equity, increased by 5,000 Rand. So Nandi now has a lawnmower. What else does she need to get started? Nandi realizes she needs cash to buy petrol, and she also needs clients to cut their lawns. So Nandi decides to phone her Uncle Bob, and he kindly agrees to lend her 1,000 Rand. Uncle Bob is also very supportive and says he will ask a few of his friends to let Nandi cut their lawns for them. So Nandi opens a bank account for her business. She puts 1,000 Rand from Uncle Bob into the account. She now has an asset of 1,000 Rand. We call that asset bank. Nandi got the money from Uncle Bob, who said she can pay him back in 2 years' time. So the 1,000 Rand is a liability, and we call the liability loan from Uncle Bob. So assets are 1,000 and her liabilities are 1,000. And in this case, equity is 0. So we see that the left side and the right side are equal. We say that the bank balance increased by 1,000 Rand and the loan from Uncle Bob increased by 1,000 Rand. So if we put these two transactions together, we see that Nandi now has two assets. She has 1,000 Rand in the bank and equipment of 5,000. She has a loan from Uncle Bob, a liability of 1,000, and her capital in the business is 5,000. So assets equals equity plus liabilities. The next day, Nandi is very excited because she gets a call from one of her uncle's friends to say she should come and mow her lawn. Nandi needs petrol for her lawnmower, so she first goes to the garage and she uses the debit card she was given for her business bank account, and she buys 50 Rand worth of petrol. So Nandi spent 50 Rand buying petrol, and this means that her bank account balance has reduced by 50 Rand. She spent the 50 Rand on petrol for her lawnmower. This is an expense of her business. She had to spend the money to be able to mow the friend's lawn, and expenses reduce equity of the business, so we give expenses a sad face. In this case, there's no effect on liabilities. So we see the assets, the bank balance, decreased by 50 Rand and equity decreased by 50 Rand because we had a fuel expense of 50 Rand. And the left and right sides are equal. So Nandi spent an afternoon mowing the friend's lawn and she got 120 Rand for her first job that she'd done. Nandi put the 120 Rand into her bank account. So her bank balance increased by 120 Rand. The 120 Rand she received from her first customer is income for her business. She earns income by mowing people's lawns, and income increases the equity of her business. So we give income a happy face. And in this case, there's no effect on liabilities. So we see that assets, the bank balance, increased by 120 Rand and equity has increased by 120 Rand worth of income. So the left and right sides are equal. So if we put the last two transactions together, the effect on assets is that Nandi's bank balance first went down by 50 Rand for the money she spent on fuel, and then increased by 120 Rand for the money she got for mowing the first customer's lawn. The net effect is that her bank balance went up by 70 Rand. So what is the effect on the right-hand side of the equation going to be? Equity is affected. The income she earned of 120 Rand increases her equity, and the fuel expense of 50 Rand decreased her equity. So the net effect on equity is that income minus expenses gives her an increase in equity of 70 Rand. The effect on liabilities is zero. So we see that the increase in her bank balance of 70 Rand is equal to the increase in equity of 70 Rand. So the left and right sides are equal. If we put all of the transactions together, we now have the following. Nandi's first asset is equipment of 5,000 Rand. Her second asset is the money in the bank. She started with 1,000 Rand from Uncle Bob, and then her balance went up by 70 Rand, the 120 Rand from the customer, minus the 50 Rand for fuel. So the remaining bank balance is now 1,070 Rand. Nandi's equity is now 5,070 Rand, which is the 5,000 capital she introduced when she bought the lawnmower, plus the 70 Rand, which is the difference between the 120 Rand income and the 50 Rand fuel expense. Finally, her liabilities are 1,000. This is the loan from Uncle Bob. So you see her assets are 5,000 plus 1,070, which is 6,070. And this is equal to her equity invested in the business of 5,070 and the loan from Uncle Bob of 1,000. So assets add up to 6,070, and the assets, the left side and the right side, equity and liabilities, are equal. So Nandi had assets of 6,070, and if we take away her liability of 1,000, it leaves her with equity of 5,070. So this is what we call double entry bookkeeping. Every transaction in the business has at least two effects that have to be recorded, and assets must always be equal to equity plus liabilities. So this is the end of the video. I hope you found it useful. Until next time, keep calm and study accounting.